What's going on, people? Happy Monday morning. Welcome back to Man and Machine, episode 169. Myself, Ben, and Mark Phillips, our good friend and partner over at Harvested Financial. How you doing this morning, Mark?
I'm doing great. How are you, Dillon?
I am also great. We'll, like normal, I'm sure we'll get into like what was the best thing we ate over the weekend. I have my answer locked and loaded. I'm still feeling it. I feel like my answer is always really bad on healthy food. It's never just like a nice fresh salad or anything. But anyway, Ben, how are you?
I'm doing pretty good.
Excellent. Happy to hear it. Well, then let's get right into it. First of all, we need music. We got a packed show today. Mark is, of course, here to give us his monthly recap on how he has been performing with portfolios, what he's been seeing, what's working, what's not, and what's next. So got all that and more. Of course, we'll do stocks in real life here. We'll take a look at any open positions, probably some economic events to keep an eye out for this week. I think it's a little more quiet today, but certainly gets busy this week. Maybe some volatility expected. So all that and more, but let's get into it. Mark, what was the best thing you ate this weekend?
This is maybe this is right up your alley, but I just had some great traditional Mexican on yesterday. It really hit the spot. Classic shrimp fajitas, nothing fancy, but just well done.
Man, now was this homemade or did you go and get it?
No, this was going out. This was with some margaritas out.
Nice. Okay, very good. It's been a little while for me. I need to get some Mexican again very soon. I never order the fajitas. I don't know why. I love it. I just never.
I'm with you.
I don't know.
I don't order fajitas when I go out to a Mexican restaurant.
And every time it walks by the table, I'm pissed. I'm like, what was I thinking?
I'm not a big orderer, and I saw it, and yesterday I was just feeling it, and I couldn't recommend it more.
Wow.
It's a great dish. It's overlooked.
Incredible. Every time it walks by, I'm mad I don't get it. Okay, very cool. Ben, what about you, man?
So I had Panera yesterday, and I know this is weird bringing Panera into the conversation of best food over the weekend, but they have a really, really good cranberry walnut chicken salad sandwich on just the greatest bread. It always hits the spot for me.
Wow. Okay. I might pull up a picture of that in the background.
I'll get it.
It sounds like it's got potential. I know it's kind of killing Mark a little bit, You should have seen his eyes when you said he's.
Yeah, I know. Listen.
You said the best bread ever, we're in New Jersey, dog. Okay?
I didn't say the best bread ever. I just said the bread is amazing.
Mark, that's exactly what he said. He said the best bread. It's fine.
I contested on both counts.
So while Ben's pulling up that picture, and look, I'm not a Panera hater. I got two way too close to my house. I happen to stumble in there every once in a while. It happens. Okay. My thing, this is less appetizing than I wanted it to be.
No, I'm telling you guys,
it does look good. Did it have that kind of volume?
It does have that kind of volume.
Okay. All right. Making up for it. Bread looked lackluster, though. I gotta admit. But anyway, very good, Ben. I'm just messing with you, man. I'm excited about that. All right.
Listen, maybe that's just saying I didn't have anything else good to eat this weekend.
No, that's exactly what you're saying. Really quickly, and then we'll get into the show. Normally, I don't feel like I take home the victory on the best thing to eat. I went all the way out to a far, far away place called Vernon, New Jersey, for a viral apple cider donut.
Whoa.
And boy, did that pay off. 45 minutes with a toddler in the car just to get these donuts. By the end of the day, 12 donuts were purchased. 12 donuts were killed. Unbelievable. These aren't these super dense apple cider donuts, like these heavy, cakey, almost like you bite into spongy, airy. Unbelievable. Okay, we have a lot of people watching here, so let's get off the food topic and into what we're here for. Let's talk about some automated strategies. Let's talk about some trades, and let's get into it. So, Ben, first off, let's get into stocks in real life, see what we got going on, and then again, hang tight. We're going to hand the mic over to to Mark to do his September review here. So let's get started.
Let's get started.
Hey, Doug.
Hey, Doug. Let's get this on screen. Stocks in real life. Today we're going to talk about NIO. Now, I doubt any of us have experience with NIO. If any of us would be, it'd be Mark, I would assume. But
I remember when they IPO'd. That's what I was just double checking, because this is one of those hot stocks that I remember everyone clamoring over to trade. So it was 2018. So that was, I remember that vividly.
Yeah. So NIO, this was a hot stock for PeakBot as well. NIO would pop up on our wheel watch list, on our trend spread watch list pretty frequently as one of the top tickers to trade, just due to the premium payout and what our expected return could have been when trading NIO. Now, their tagline here, I don't know how accurate this actually is, but NIO, blue sky coming.
Okay.
Not too sure what they mean. And for those of you that don't know NIO, they're a car company. They're I'll call it like a smart car company, electric focused, Chinese. I might be getting this wrong, but I think NIO they either are the company or played a hand in these electric battery swap stations in China that are potentially being considered for the US. So if you have any experience with electric cars, you'll know that it kind of sucks when you have to refuel on the road, because you have to pull up, you got to find the electric charging station, you got to go to it, then you got to sit there for like a half hour while it charges. Whereas this new concept in China is basically you pull into a station, they swap out your battery for a fully charged battery. Oh, there you go. And you're in and you're out in a matter of minutes, potentially faster than what it takes to fill up a tank of gas right now.
Yeah, interesting. Certainly faster than sitting there for a charge. So, all right, very cool. Yeah, NIO. I want to see some images of the. Whoa. Okay, so we got some cool conceptual cars here. I like the logo. Got to be honest with you. Anyway, I'll let you back on here, Ben. Okay, so let's talk about it. Mark, you said you had an eye on this stock when it launched in 2018. That you took away my fun fact. You nailed it. 2018 was the launch. In fact, September 4th of 2018. Let's get a chart up. I actually have one up. Do you guys have any personal experience with this stock, or the company rather?
No, I mean, the reason I wanted to talk about it was maybe just to talk about our experience with electric cars in general.
Yeah.
Right. Mark, do you have any experience, let's just say with Tesla, right? Driving a Tesla.
I don't drive one. I have one of the plug-in hybrids though. Otherwise, that we run mostly on battery. And I mean, the battery driving is completely different. Like, it feels amazing.
Yeah,
the acceleration is incredible. Waiting for a charge, I've never gone down that path, but like pulling off the line when you're on battery, that does feel good.
Yeah. Ben, you don't have any electric or hybrid vehicles, do you?
No. I mean, we are going to soon be in the market for another car once I decide I want to part with my Nissan Sentra.
That's been sitting in your parking lot dead.
Yeah. There's emotional connection to that car, so
totally get
it. But no, I am interested in the whole hybrid route. So Mark, you've got a hybrid car. You plug it in every night?
Yep. It gets up to like 40 miles on a charge. So for like a normal day, it's my wife that drives it mostly, but like for a normal day, you're mostly on battery.
Yeah.
Very nice. And then it'll just kick into fuel once the battery runs out.
Yep. And then there are certain scenarios where, like, if you're accelerating in a highway on ramp, or like maybe even like some parking maneuvers that are like high energy, like it'll definitely transition, even if there is battery power. Yeah.
Doug agrees.
Yeah.
Plug-in hybrid.
That's kind of, so does it also recharge the battery when you're driving with fuel?
Yeah, you get a little bit.
Okay.
Like on the braking, like it'll, add some there. And there's even a setting that you can set it to like a more aggressive brake that will more aggressively charge the car. That's not adding much though.
Okay.
But enough that like,
it's the concept that I like.
yeah.
I just need a backup. I've heard friends get stranded on trips, on vacations because they rented a Tesla and then they're out west and they're in between and it's ruining their road trip and they're stuck and they're going out of their way.
That happened to me. Yeah.
That's okay. I don't want to quote you.
Went out to Joshua Tree and decided to rent a Tesla Model X, and we were out there. Got to our Airbnb, we were going to go out to Joshua Tree the next morning. They didn't have enough battery. Had to find the nearest charging station 30 minutes away at a casino, drive 30 minutes, go to the casino for 30 minutes, lose 4 times the amount of money it would take to actually charge the car, and then drive back for it. So it was a call it a 2-hour affair and cost about 5 times the amount that was needed to actually charge the car. So after that, I wasn't happy.
Brutal.
No, range anxiety is a real thing. I mean, it's, as the infrastructure gets better, sure. But it still takes a little longer than, filling up with some good old petrol.
Well, and unfortunately, I'm the guy who lets the gas tank go all the way down. I mean, I'm talking, the car's telling me I got 13 miles left and I'm still going on a trip to Target and not getting gas coming back, Anyway, I did have this chart pulled up. Somebody must have pulled it up for me. So this is let's look at all time quickly on NIO. All right. So these are monthly bars here now. All right. So this was the launch back in 2018, launched at, right around $6.50, $6. Had a nice little couple months into 2019. This is pre-COVID pullback here. It seems as if COVID happens and they explode for a few months, come all the way up to their high of $57, $58 maybe. And then this was in February of 21. And since then, they've been in quite a bearish pattern here, maybe a little pop in 23. However, if we look at year to date, they've been relatively bullish. I'd say, this was kind of like this big pullback in April. They had a little bit of a fluctuation here, but certainly since July, this company's been very bullish. Now trading around $7.66, coming all the way up from $3.50. So more than doubled since July. For a very bearish stock in the in the macro, this is pretty bullish over the last year here. I don't know if we want to try to form any trade ideas here. I don't think we need to, but what are your guys' thoughts on looking at the chart here? Here's the last month.
Yeah, I just think back to when we were wheeling NIO all the time.
Yeah.
We made a good amount of money doing it.
Yeah, I know traders who did it. I don't know how often I took NIO on the wheel. It just scares me when these really cheap stocks on the wheel. I don't think that's necessarily, not financial advice, not like fundamentally sound or smart for my portfolio. But hey, listen, I'll tell you this. I'm bullish on this stock over the next, few months. I drew this blue line here. There was kind of some support being given back this direction here. This kind of looks silly on my chart, so apologies. But I don't know. We're kind of right at another key level here, potentially meeting back to September 24. But I think we've spent enough time on NIO. What do you guys think?
Now, the one last thing I'll add about the low dollar stocks is just practically wheeling them can get difficult because the strike selections you're limited to. And I know we've hit on that before, but when you only have 50 cents in between a $5 stock, right, your decrement is 10% of the stock price compared to like, a fraction of that in say SPY or, even an Apple. Yep.
And to be clear, this is like old school wheel automation for us. And we're actually making updates to our wheel strategy where you are only able to select from 8 different underlying alt ETFs. So NIO wheel won't be automating with PeakBot anytime soon. But very cool. I think we move on here. Let's get into, and by the way, the sizing with 3 of us here we're just going to be playing with it. We're going to just be moving around. But anyway, let's get into a review with Mark. Yeah.
Sure.
Let's do it. Mark.
So hard to believe that September's in the books already. We're already practically a week into October. So
that's crazy.
Right? Leaves are falling. Halloween decorations are showing up. I mean, we're full on fall now.
Yeah.
Full on Q4.
Have you guys, to sidetrack us for 1 minute, have you guys noticed an increase in Halloween decorations this year? And I don't know if it's just around where I live, but it seems like people are going all out on Halloween decorations this year.
Mark, do you have an answer to that?
We have a solid amount. It's hard. This is only my third Halloween in this location, so hard to have a real baseline. But yeah, it does feel like a very active Halloween decorating year. It's
going like this, and I'll tell you why. I think it's social media, because you go on Instagram, you go on TikTok, you see these huge life size. Forget life size, house size, 30 feet tall skeletons, or these huge things coming out of a roof. I saw somebody post a question, where is this all year? Do you really have a storage unit just for your Halloween skeletons? I mean, you must. It's crazy. My town here is very all about it, always has been, but it is getting crazier. Sorry, Mark, let's get back to it. Go for it.
We'll cover that more in the October recap. So tune in for that.
There we go.
We'll see if it's a leading indicator of October or not.
That's right.
The theme of this September's recap was that options trading doesn't make money. And the idea behind that is to say that it's not trading options that makes money, it's using options to capture an edge that you see in the market. And I know that's something that we've talked about a lot, between us as we develop bots, as we think about different strategies and whatnot. But I kind of go with that really strong lead, because it's important to know that just trading options or just trading a strategy isn't going to open up an ATM for anyone. That you want to use this vehicle because you see edge in the marketplace. And just trading XYZ strategy or just selling condors isn't going to work, because markets are pretty efficient over time. We need to adapt and have strategies like the King Condor that are isolating when we want to trade, whether we want to avoid events, whether we want to look at environments that we think volatility is going to realize less than its price. We want to find those opportunities with options. And so I really hammer on the idea that, whether you're looking at an opportunistic strategy, like a short-term 0 DTE, 1 DTE, a lot of the automations that we have with bots, you want to find your edge in that place, or you want to use options for risk transfer. You want to use the options markets and the pricing that they're offering, the highly efficient pricing that we see in like some of the most liquid vehicles globally, and use that to modify your risk. And this is actually a little bit of a teaser of an upcoming bot that we're going to be working on, more in that sort of investment managey, long-term asset overlay, is a bot that's specifically designed to constantly engage in a risk transfer that gives you a little bit more leverage and risk premium capture over the standard S&P 500 allocation. So that skew premium is going to be something that's coming up in the next couple months. But teasing that idea out of making sure that whether they're my clients or whether they're investors, just generally thinking about where you're using options to either capture an edge that you believe is persistent and demonstrated, and whether that's a selection of the proper underlying in the wheel or finding the right time to turn that on, or using a bot that has that built in like King Condor, or generally thinking about risk transfer with options. So that was the big theme of kind of the September update. As far as how portfolios went, if you recall, August was a little bit choppy because the variance risk premium, the volatility risk premium that we target in a lot of these strategies was a lot thinner. And I can pull it up if you'll let me share. Sure. Didn't totally prepare for this, but
that's right.
I had a good image of.
Take your time.
Yeah, so this is stock versus VRP, close to close 10-day. And so you can see this chart goes, from middle of June all the way to the end of September here. So, times when the King Condor and Shorbo, the general premium capture strategies did well, June and July, where that VRP is low to, even negative in some of these cases. That was August. That's why those were choppy. But we kind of saw a return to this long-term average in September, and we're pretty happy with the performance of those bots, specifically during September. So, another important thing to consider is that even if you do have that edge, it's not going to be there all the time. And I know we had a number of client conversations during August. If people seeing increasingly choppy results, and it's hard to know at that time what the best thing to do is. But kind of like a fitness trainer, some of my role as the advisor is to keep that ship steady, say, you know what, we still believe in the persistence of this premium. And at the end of the day, September really rewarded those who stuck it out and kept the ship straight. And we returned a couple points in the portfolio, which is a great month. And thanks to the diversification, specifically speaking within the bot portfolio, diversification of King Condor and Shorbo.
Mm-hmm. It's amazing. And this is a really helpful chart here, right? It's incredibly telling, when you look in retrospect here. So very helpful stuff. You mentioned the teaser for the new bot that's coming. I'd love to kind of touch on this a little bit more if you guys are up for it. We don't need to be giving away all the information, but Ben, Mark, whoever wants to kind of give a little bit more info into what we're working on next and where it might fit into, your portfolio. Who wants to take it?
Yeah, sure. I'll take that away.
Yeah, do it.
Broadly, the way I think about using option strategies in portfolios is I divide the world into two camps. And so I sort of teased that a little bit before, but the idea of opportunistic strategies versus investment strategies. And so with that opportunistic bucket, that's typically where I'm recommending clients allocate anywhere between 5 and 20%, right? So it can be a meaningful part, it can be just a little dose, but depending on risk tolerance, that's a relatively smaller part of the portfolio because higher risk, generally higher reward. We're going to see more volatility in the results of those. So that's where I generally have a lot of the short-term bots allocated. And actively trading, taking bigger risks. You're seeing bigger P&L swings day to day. But that's, like I said, more risk, generally more reward in that type of opportunity.
Yeah, absolutely.
Thinking about the other side of the portfolio, though, which is really the cornerstone, that backbone of a portfolio. Typically, the classic advisor model is going to put you in something like 60-40, right? We've all heard that, where you get 60% equities, 40% bonds, rebalance every quarter, and set it and forget it. Sure, there's something to be said for that, but I think you can actually do a little bit more with that baseline. I generally tend to be more equities biased, as I believe that recently the correlation between stocks and bonds is somewhat broken down. So I tend to think about more taking that equity component and dialing the risk in appropriately on the equity, because rather than using bonds to dilute it to get that risk tolerance, I want to use options because that's what I know best. And because they're specifically designed to be derivatives on the underlying and bend the risk of what that underlying performance is. So you can take, right down the middle, you have a classic S&P 500 allocation or NASDAQ 100 allocation, whatever that underlying, I like low fee diversified indices is the benchmark there. And then you can dial it down using a hedged equity strategy, type of strategy where you use options to buffer your upside or buffer your downside in exchange for upside. But I think where the bot is going to be really good for executing is with our sort of skew prime strategy that is turning up the risk on an underlying portfolio. And, this is for allocations that are much longer term. This is stuff we're looking at, not necessarily the day-to-day or month-to-month performance of, but how is this going to fit in my portfolio for the next 5 and 10 years? And so because there are a bunch of different trades that this strategy needs to make, a bot is actually the perfect implementation. I run it manually for myself, but you're hedging stock, you're adjusting options weekly, all with the eye to capturing the variance risk premium and the skew premium specifically, or that VRP in the skew, by using synthetic options positions to replicate what the stock position would look like. So rather than getting 100% of your exposure from stock, by getting long equity exposure from a short put long call, you also capture, in addition to the equity risk premium that has long-term equities outperforming over bonds, you capture a little bit of that embedded skew, kurtosis, VRP premium that exists in the options. It's going to introduce more volatility to the strategy, right? There's going to be, that extra return doesn't come for free, but generally we found that this layers on a couple points of return compared to the basic underlying. So super excited to see some automations in this domain, because really opens up the potential to leverage option strategies on those core holdings and really take advantage of the other facet of what options provide, which is basic risk transfer and risk adjustment.
Yeah, I really, really like what we've been building here, and we are going to start testing this bot this week, actually. So it's going to be fun to see that in action. This bot, the Skew Preem bot, which maybe we'll stick with that name, maybe we won't. I think
you can tell me my naming's terrible. That's fine.
I actually like it.
It took me a minute to figure out Skew Preem, like Supreme, like make that connection, but I'm a little slow sometimes. I think it's worth mentioning also that the Skew Preem bot really works best in a financial advisory type environment because of, hey, we want to let this bot just run over time. So the Skew Preem bot, I think we talked about this briefly. I think it's going to be exclusive to the Harvested Financial / PeakBot relationship. I will say that it's due to the overall style and overall holding period. I'll call it holding period. It's not actually a holding period, but the overall style of the strategy and the need for it to be longer term. Oh, Doug's come up with a really
this is a good name.
R2D Skew. Yes.
I want to know if Doug used ChatGPT to come up with a list of names, or if that was
Disney might sue us if we use that name. But
R2D Skew. It is good though. It is good.
It's got a ring to it.
Yeah.
I totally agree, Ben, because this is meant to be against a long-term portfolio. This is to manage something that is like the backbone of your investment. It would be aggressive, but you could overlay this over 100% of your equities allocation. And that's actually something that I do work with clients on, is what is the right mix here, right? Because I said it would be very aggressive. If you want to own 1,000 shares of stock and to replicate 30% of it with this, you're going to see some chop. Full disclosure, this is going to add variance to your returns because you're basically willing to be short that variance, which tends to pay. But and it's something I've developed over time and is based on a lot of research out there about the persistence of this VRP and where it exists.
Yep. So if you want this bot, you're gonna have to sign up for Harvested Financial. You can do that at peakbot.com/harvested. We've got our link tree at the bottom of the screen right now, linktree.com/use PeakBot. You'll see Mark's beautiful face on our link tree. Click on that face and you can get started with Mark today. And I will just mention before we move on to the next segment that this kind of leads into like 3 different types of bots that we're focusing on developing right now at PeakBot. One is this, call it longer term investment style bot or strategies that we would use with a financial advisor like Mark, right? The second is a longer term, call it investment style options trading strategy that you could use on your own. Right. We've got to think through all of the details of how we deal with the human emotion of this is going to be a strategy that you let run for a couple of years and you don't touch it. That's very hard to do from the retail trader level. And then the third tranche of bots that we're developing right now currently, and that I feel like we've made the most progress in, is our AI bots. where we're taking King Condor, we're taking Shorebow, we're running them through some machine learning models. We're testing them against over 300 data points in the market. And we're determining, based on that, if we should or we shouldn't trade, if we should adjust where we're taking our strike prices, and a number of different factors like that. And so far, and Mark, we'll have to update you on this separately. So far, the King AI bot has not lost, and it's been 3 weeks. It's been pretty cool to watch, and the backtest results are literally unbelievable. Like we can't show the results because the FTC would come after us for false advertisement, even though it's a true backtest. So anyways, those are the 3 different tranches of bots that we're currently working on. I'm excited for this. This is a follow-up to our next gen strategies that we've recently released. Fellas, any comments before we move on to the bot shop?
Yes. I just wanted to recap for anybody who is not familiar, our partnership and relationship with Mark and Harvested Financial. So PeakBot, we have our own automated strategies. Mark is a registered investment advisor, financial advisor, and you are able to get involved. And instead of hands-free trading, you can be completely hands-off, right? So let Mark manage your portfolio for you, work with him. Mark, I know we had recently been discussing a minimum capital needed for these portfolios. Is there an updated number for that we want to let the people know?
Yeah, like that's been one of the conversations we've been having, and like it sort of speaks to that volatility of returns question, and also thinking about where this fits in the overall portfolio. So while you can do these at a relatively small amount, and so long as that's cognizant of how that fits in overall, of course that's possible. But really, our recommended number right now is about 50K, and that's because I want to be able to get access to a stable of different bots. And I think this might even be a little bit of a lead into what Ben wants to talk about. But anchoring that 50K is an allocation to a relatively stable bot compared to, say, the King Condor and Shorebow, which high risk, high reward, compared to the Ben bot, which is going to take up a lot of that allocation, but it's going to look a lot more equity-like, and it's going to be a lot more stable capital base for those other higher risk components. So I like the 50K number because it allows me to get clients involved in King Condor, Shorebow, but also have that kind of baseline Ben bot allocation that is representing a stable capital base and taking somewhat lower risk trades.
Absolutely. So I wanted you to just be able to provide that update, and I know we'll make some updates because previously we had a lower minimum, but yeah, only doing that to make smarter decisions overall for the clients there. So excellent. I think that's all I wanted to mention there. I believe we want to get into the bot shop and talk about one of our most reliable, most consistent bots, the Ben bot. Ben, I'm going to hand it over to you. What are we talking about today?
Yes, so we were talking about the Ben bot, and we were off last week. So we have to think back to 2 weeks ago, where we just gave a brief overview of the Ben bot. So we gave the intro plus the results for the Ben bot. Today we're going to talk about entry criteria for the Ben bot. Very simple. Now the difference between what we talk about for the strategy now compared to what we talked about for King Condor and for Shorebow is we don't have different charts to compare. So we're just going to talk in theory, and who better to talk about theory than Mark Phillips. So great timing, Mark, to be on the call with us today. So yes, we won't be showing like how a certain change would have affected the overall results. That's because we can't really backtest the Ben bot strategy. And that's because the adjustments later on in the day are not subject to I'll call it concrete set of rules. They're subject to a pretty hard set of rules, but it's not set in stone. There could be slight modifications. So due to those factors, we can't go back and say change in X would have resulted in Y, but we can talk about the different theory of what would have happened or why things happen a certain way. So just again to reiterate the basics of the BenBot, we do consider this PeakBot's safest strategy. It has our lowest drawdown over a longer period of time. You do need $25,000 per unit of BenBot, and that's because we are buying 100 shares of IWM, which is actually nearing the cost of $25,000 as the price of IWM increases. But we're also day trading here, so you do need to be PDT eligible. I'd actually love to get Mark's thoughts on the proposed rule change to lower that amount from $25,000 to $2,000. Mark, I know you wrote a comment letter to FINRA about that exact topic, PDT. Maybe we'll get your thoughts on that in a little bit. But then also, so this is selling a daily cover call on IWM at the money strike. It's a bullish to neutral strategy. Really, it's a daily bullish strategy. We want the price to go up within the day. We don't care about overnight gaps because we're not holding positions overnight. And if we are holding a position overnight, we're going to have a protective put on our side. And this is only available on Tradier and public. The results are to the right. We won't focus too much on those just now. I'd like for you to go to our website, peakbot.com/strategies, and you can dig into all of the numbers there. If you have questions, feel free to use the chat icon on the website or to schedule a call with us. We'd love to talk to you about it and see how this can work into your portfolio. But let's move on to the entries. So the BenBot enters at 9:33 a.m. Eastern. So we want to answer the questions, why not right at the open? Why are we waiting until 9:33? And then why don't we wait until like late morning, early afternoon-ish, right? What's the deal with 9:33? Why is that the magic number? Well, when it comes to trading, there's really no magic in anything. But the reasoning behind, why not 9:30 is takes a couple minutes when the market opens for prices to kind of settle in. If you've ever watched the market open, you'll notice in those first couple minutes, we're just bouncing around everywhere with seemingly no rhyme or reason. So we do want the market to settle in just a little bit, so that way we don't get caught in like a random upswing and then get hurt on a swing back down for the rest of the day. We're going to wait those first couple minutes. That's really, in my mind, the main reason. And that covers kind of all of the bullet points there. By 9:33, the spreads on the contract that we're going to be trading will tighten. Pricing stabilizes a little bit, making the overall entry environment a little more advantageous for us, or a little bit more consistent is probably the better choice of word there. So why not late afternoon or late morning or early afternoon? If you wait long enough in the day, well, theta is going to start working against you because this is a 0 DTE contract. That call that we're going to sell to cover our shares, that's going to lose value as we go further on throughout the day. And we're just not going to see the type of return that we would from getting in earlier in the morning. Now, I do know from experience that, depending where price is when we sell our cover call, we're going to earn anywhere from call it on average, 50 to $1.20, 50 cents to $1.20 on in premium. Again, depending on where price is and what strike we're selling. If we waited until the late morning, early afternoon, we're probably only going to get, I'd say, 50% of that, maybe 60% of that total premium. And that's just because there's only so much time left in the day, right? We're going to collect more premium on the call earlier on, and that early morning volatility helps as well. It helps bump up price because we're selling a call there. We want price to be higher. So we want to sell coming out of that morning volatility. We want to sell with enough time left in the day. And then as prices settle in, that works in our favor. As time goes on, that works in our favor. So the bottom line here is 9:33. A 9:33 opening allows us to avoid the chaotic opening. It allows us to capture maximum premium because we're not waiting until later in the day. we get ahead of an intraday IWM trend. Now, sometimes that does come back to bite us, but we will roll our strikes if it does come back to bite us. And so we're overall maximizing our ROI here while attempting to keep drawdown as low as possible. And we are able to keep drawdown as low as possible because we do own those shares, and we're really betting on the stability of IWM on 2,000 small caps, not just one particular name. So that's entry timing. Fellas, do you have any comments, questions about the entry timing before we move on to another factor for entry, which is the overnight gap? Dillon, you're muted. You're muted.
I'm muted. Unbelievable. I don't have any questions. If it ain't broke, don't fix it. Mark, did you have any questions or comments on the entry timing here? If not, we can keep moving.
No, you nailed it.
Awesome.
Cool.
Ben, keep moving, brother.
All right. Last point for the entry, and then we will get into some economic events and get this show wrapped up here. Gap ups. So currently, we are not trading on a gap up of over 2%. So the questions to answer here are, why don't we just disregard the gaps, or why don't we have a stricter filter on gaps, thinking, what about 1%? Why 2%? So why don't we disregard gaps? So there's, of course, the reversion risk. After a 2% gap, you can go back and look at the charts, right? And you'll notice that if there is a large gap, and it doesn't have to just be 2% plus, IWM will often pull back to the mean. So it's a mean reversion at that point. We don't want to get stuck in that because, again, we are bullish on the day with this strategy. We want price to go up during the day, not down. So if we gap up overnight, well, that's potentially the only move up we're going to get, and we're stacking the odds against us if we're counting on a continuation there, just based on past data. So buying shares after a big jump exposes the bot to higher downside risk, lower call premium relative to that risk. And we have seen, 1% gaps up where we don't get a lot of premium, and then we do revert back to the mean. And those days are not fun days. It's the behavioral trap here at the bottom is retail traders often chase the gaps up. It's fun, right? There are many strategies based on overnight gaps. However, I personally don't think that would apply to a ticker like IWM. You typically see like a lot of these gap and go type strategies on smaller cap stocks with a catalyst. But statistics show that these large gaps usually don't hold throughout the day. Now, I'd say in the past 6 months, you could argue against that. The market has been ripping upwards, and I'd say maybe 3 months. But even before that, the overall behavior would have been slightly different than we had seen over the past 4 years. So what if we used a stricter gap filter, right? So we're saying, hey, 2% gap up, we're not going to trade. What if we said 1% gap up, we're not going to trade? Well, we might miss out on too many valid trading opportunities. I'd say it's a lot more common for IWM to gap up 1% overnight versus 2% overnight. 1% gaps, at least going back and looking at the data, and I do reference backtesting here, not that we have backtesting charts and results to show. This is just from looking back at charts, taking notes, and honestly just watching the bot trade live and trading it live, and taking those notes. We see that a 1% gap up, it still results in a lot of wins, enough wins for us to keep trading through this strategy. So the sweet spot, it's that 2%. It's rare enough to avoid only the most volatile days. It keeps you in the game. Yeah, I put 90% here. I'll say 99% off paper. It keeps you in the game 99% of the time. And it's based on our past data. That's the 2% gap is where we see the quality drop most. We haven't won a trade. I'll put it this way. We haven't won a trade on BenBot if the market has gapped up if IWM is gapped up over 2% overnight.
Yep.
So that was a lot. But those are our entry filters.
It's important. This is really important, right? This is a very sound strategy. And, there's a lot of information here, but I think what I love about the BenBot, and I think what a lot of traders love about the BenBot, is it is simple compared to a lot of our other strategies, right? The simplicity tends to, over time, really pay off, right? We're not looking for a million different factors and a million different data points for something to be, the right trade at the right time. We're playing the market, we're playing every day, and we're being relatively conservative about it while still collecting a nice premium and protecting our downside. So, Mark, did you have any questions or comments on the BenBot? Otherwise, we'll move right into economic events to look out for this week.
Yeah, just really quickly, I think it's always, interesting to think about what the type of names are that are going to be included in the Russell 2000. And that's partly why I like this underlying index here. And whether that's in the context of gap ups, right? Like we're thinking small cap companies. If there's a gap up, like a significant one in a name like that, those are going to gap more than your S&P 500 products. But on the other hand, from a long-term covered call perspective and the idea of selling the right tail on returns, I mean, this is a daily strategy, but the best companies in the Russell 2000 are going to migrate out of the Russell 2000. Yeah. So unlike the S&P 500, where you're going to see increasing concentration from the best performing companies, these guys are going to move up and out. And so your right tail is a little bit lower naturally than, I think what you'd see in other indices. And so I think whether it's gaps or whether it's, overall underlying selection, I think the composition of the BenBot, it's important to keep in mind what names are in that 2000 bucket. Although I don't think it's 2000 names. I think it's less than that.
Well, actually, I pulled it up.
Is it more?
I should no. I think it's just less. I think it's saying somewhere around like 1900, 1978, maybe just shy of 2000. Do you have any guesses? I'm going to share a screen here in a second. You guys have any guesses as to what some of the top holdings are in IWM? Any stocks that you guys can pull out that you might guess are in there? I'll tell you what, I'm looking at the top of the list. Truthfully, I haven't heard of any of these.
Yeah.
No chance.
All right, so here, let me just pull this up on screen to see what you guys think quickly, and then we'll very quickly move on. This is interesting, though. This is as of today, as of the 3rd. So here's this. Let's just get us out of the way here. So this is iShares.com on the Russell 2000 ETF. As of October 3rd, we can see that overall weight in the portfolio here, the largest one being this Credo Technology Group, ticker CRDO, bringing in just about 0.75% of the overall portfolio. So you can see here, of course, we got a lot of IT, industrials, utilities, materials, communication. This is pretty cool. To be honest, I've never really looked at the individual stocks underneath the IWM ETF here. So just wanted to share that. Soundhound AI, maybe that's the first one I've heard of. I'm not sure, but Riot. There we go. Sorry, Riot and Marathon, two of the former Wheel's most volatile stocks.
That's one way to put it.
Yeah. Anyway, very cool. Ben, give us what we got to look out for. I know we captured this briefly on our Friday show, so go ahead and fly through it.
So looking ahead to this week, economic events, we got a whole lot of nothing today. Looking into tomorrow, we've got a couple of Fed speeches, but not too much. On Wednesday, things start to pick up a little bit. We have some more Fed speeches. We've got 10-year note auctions, and we have FOMC minutes. Going to Thursday, we got a Jay Powell speech in the morning. Bots will be off from Wednesday going into Thursday. I think there are rumors of potentially talking about another rate cut. I don't know the validity of those rumors, but we will see. And then we've got a 30-year bond auction later in the day. And then moving into Friday, we have that pesky Michigan Consumer Sentiment Report with a whole lot of nothing in the afternoon. So check that inactivity schedule on your PeakBot app this week to see what bots will be trading and what bots will not be trading through these economic events. FOMC minutes are, again, just minutes, but tend to cause some unexpected or unwanted, rather, movement. So we will be sitting out for that for some bots. And then, of course, the J Pow speech on Thursday will cause us to be out on those overnight plays. But that's about it for this week. Next week, we'll be rolling into a short week. We've got Columbus Day next Monday. Dillon, I'll stick to this. We should still golf on Monday.
Huh. I like that idea.
And Mark,
awesome,
if you
guys.
want to meet somewhere in the middle.
I will be in Mexico on Monday, so no golf for me.
You
Amazing.
can golf in Mexico.
Whatever.
Off the Gulf of America, you mean?
There you go.
Let me ask you this. Was your Mexican meal over the weekend just in preparation for your trip? Was it to get you excited about your trip to Mexico? I think it was.
We eat a lot of Mexican food in general, so that's well within bounds. Yeah.
Awesome. All right. Well, we'll just need, I think upon your return, next time you join the show, we will need you to hand select one picture from this trip for you to share. Now you have that piece of information going into the trip. Have some fun with that. Be creative. Maybe throw a hat on the beach. Maybe a PeakBot logo finds it. I'm just kidding. All right. Thank you so much, everybody, for joining on this beautiful Monday morning. We will be back Friday at noon Eastern for Automation Station with the PeakBot team to cover all of our automated strategies, what's hot, what's not, and more. You can visit our Linktree, linktree.com/usepeakbot for full list of products and partners. Thank you so much for joining. And as always, we'll see you at the peak. Here we go.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.